Welcome to Common Ground with Bill Walton, featuring conversations with leaders, entrepreneurs, artists, and thinkers. Fresh perspectives on money, culture, politics, and human flourishing. Interesting people, interesting things.
I'm joined today by Peter Wallison, who is with the American Enterprise Institute and is the Arthur Burns Fellow in Financial Policy Studies, where he researches banking, insurance, and securities regulation. As a general counsel of the U.S. Treasury Department, he had a significant role in the development of the Reagan administration's proposals for the deregulation of the financial services industry. He is author of many books, but most recently, he's the author of Hidden in Plain Sight, which is about the causes, the real causes, of the financial meltdown in 2008. Peter, welcome.
Great to be with you, Bill.
Great to have you here. You wrote something interesting in the Wall Street Journal a couple of weeks ago, the title of which is The Trump Treasury's Disturbing Regulatory Turn. Now, that's a subject you know something about. What's happening at Treasury that's a cause for alarm?
Well, nothing's happening at Treasury, and those few things that are happening at Treasury are alarming. The thing that worries me most is something called the use of the Financial Stability Oversight Council, which was set up by the Dodd-Frank Act. We call it the FSOC, Financial
FCOC.
Stability,
Okay.
FSOC.
Yeah.
And it's a council of all of the financial regulators in the federal government. They're all together.
So that would be
The
Treasury, SEC.
Treasury, SEC, CFTC, that is the
Federal Reserve.
Federal Reserve,
Yeah.
the CFTC, the Controller of the Currency, the FDIC, they're all there around the table under the chairmanship of the Secretary of the Treasury. So it's a very powerful organization. And it has been given substantial powers by Congress in this Dodd-Frank Act that I mentioned. The thing that worried me most about the FSOC as it operated in the Obama administration, mostly under Secretary Lew, was that it seemed to me they were attempting to use the FSOC to create a regulatory system that would cover all of the developed countries, the United States and all of the countries of Europe, China, and some of the others. This doesn't seem possible to think about, but after the financial crisis, Obama got together with the leaders of all of these other countries called the G10, and they decided that they would set up a sort of a council of countries, just like the FSOC, but this would be called the Financial Stability Board. And under the Financial Stability Board, they could discuss the creation of this substantial new regulatory structure for the world's economy, because there was such fear that without regulatory control, we would have another financial crisis.
Because they'd done such a good job before the financial crisis,
yeah.
they ought to do more of the same.
Exactly. Imitate what they had done in the past.
Somebody said that John Allison, who ran BB&T, said the Federal Reserve's financial models have predicted 0 of the last 100 meltdowns or something like that. It's
That's right. It was only a bunch of statists could get together and create this idea. The enormity of it was something to behold, because the idea that you're going to create a regulatory structure for the entire world's financial system is pretty ambitious. And the question then for everyone on this group was, how are we going to get control of the U.S. financial system? Because unless you can get control of the U.S., we have the strongest financial system. We're the most innovative. We are the most powerful and the most wealthy. What we do sets the terms for everyone else, because they have to compete with us. The FSOC in the United States was the answer to this, because the FSOC has enough power to introduce into the United States the regulations and ideas that are adopted by this FSB, which is made up mostly of ministers of finance and other regulators in Europe and some Asian countries, plus the Federal Reserve from the United States and the Treasury from the United States.
Well, the financial FSOC, as we fondly, or maybe
Yes.
not so fondly know it, has a couple of big powers. One is to designate large non-bank financial firms as needing enhanced supervision because they're part of the problem of too big to fail.
Right.
And the other one is
Activities.
activities.
There were two things in the Dodd-Frank Act that the FSOC could deal with. One was this designation of large, systemically important financial institutions, which are not well defined in any way. What they say they are, they are. And the other is dealing with activities that were deemed to be dangerous to have in an economy. Now, if you're a bunch of regulators, any activity is dangerous unless you can control it. And what I think they were looking to was that this FSB would develop some ideas for controlling something that they called a shadow banking system. And what was a shadow banking system? They defined it as any financial activity that was not subject to prudential control, which meant oversight by a regulator who was concerned about its risk-taking. So, for example, in our securities area, we have a very innovative securities area, and one of the reasons for that is that no one tries to control the kinds of risks that securities firms take. They are entitled to do things that look pretty good to them and will advance their own businesses, and as a result, we've had a very robust securities market for many years.
And more recently, we've got financial innovation, what's known as fintech.
Yes, and
lot-
that is a wonderful thing, perfect example of how things develop in the United States. That will be competing with banks over the years. And of course, the regulators will want to get control of that because by competing with banks, it makes it very difficult for them to clamp down on what banks do and control what banks do because they have these competitors outside the banking system that are not under control. So the perfect example of a shadow bank is fintech.
Yeah, where we're consumer or business lending over the internet. Yeah,
Right,
yeah.
right. And uncontrolled. This is a terrible idea from the standpoint of regulators. So the idea is to get control of these shadow banks in some way, both in Europe and in other places in the world and in the United States. And it was to be done through the FSOC in the United States, which had the power, actually, to do this. Now, under the Obama administration, the only thing that they did was designate several very large companies as systemically important. The first thing you mentioned.
MetLife, Prudential, AIG, I think.
and GE Capital, and AIG, and poor GE Capital.
GE, rather than being regulated, sold the finance
you see
unit.
what they did? You see, this is such a great example of how terrible regulation is. They took GE Capital, which was one of the great sources of risk financing for small and medium-sized businesses, and they collapsed it into nothing. It's gone. It was bigger than GE at one point.
We partnered with GE Finance, and they were very smart, very good, and it's a shame to see them gone.
Exactly. But this is an example of what happens when you subject a company that was not regulated to the Fed's regulation, which is what would happen to any of these companies that were designated. So when Trump came into office saying that Dodd-Frank was a catastrophe, a disaster, and we've got to repeal it, I was jubilant because I assumed that the Treasury Department was now going to step in and eliminate the FSOC. They don't have to do anything with the FSOC. They could simply stop convening meetings, and that would be the end of it. But that didn't happen, Bill.
Well, one of the things, if we could back up just a second, because you and I share a view that the root cause of the financial crisis in 2008 was not Wall Street greed, although I worked on Wall Street, and there is a lot of greed on Wall Street.
Sure. I hope there is. There should be.
But Wall Street responds to signals, to incentives, to the rules that are put out for them, and Wall Street created trillions of dollars, maybe that's an exaggeration, but not by much, mortgage-backed securities.
Right.
which led us into this incredible housing bubble, and it blew up. Now, the root cause of that, you believe, was, and I believe,
was the government's
I'm
housing
being your
policy.
straight guy here.
Well, you're being good, right? You're going right for it. But government's housing policy created the crisis.
Yeah.
And it did so in a very simple way because it imposed rules on the housing finance system through two government-backed firms called Fannie Mae and Freddie Mac, which required them to buy mortgages from people who actually could not afford to own homes. In many cases, they didn't have the down payments, and they didn't have the credit scores that would testify to their ability to meet their obligations, but they were required by the government through Fannie Mae and Freddie Mac, which the government regulated Fannie and Freddie. They were required to buy a certain number of these mortgages. It started at 30% of all the mortgages they bought.
I think it was 1992.
1992, exactly.
Affordable housing, they said.
Affordable housing goals.
Yeah.
30% of all the mortgages they bought, and they were dominating the housing finance industry. They probably were buying half of all mortgages in the United States from banks and other originators. So in 1992, they were told 30% of all the mortgages you buy have to be made to people who are at or below the median income.
It's interesting. I was on the board of the Financial Services Roundtable with a lot of the heads of the big banks, and I remember them complaining that they were doing a lot in the mortgage finance area they were very uncomfortable with because the underwriting standards were not what they wanted to use,
Right.
but yet they were being told, no, this is the kind of mortgage we want you to originate and sell. And then they got bundled up in securities, and that's what blew up.
Yeah. Well,
So they weren't being driven by their own standards. They were being driven by the regulator standards.
the regulator standards. And what happened is that when you reduce underwriting standards, as these people knew, it causes a boom because more and more people are able to buy homes. And as that is true, home prices start to rise. And then for all the lenders, it looks less risky because as home prices are rising, if you make a loan, the next year the house is going to be worth more, and even if the mortgage isn't paid, you can probably sell the house for the amount of the mortgage.
All the models were built at the time assuming house prices would always rise and never fall because they hadn't fallen since World War II.
Right. And what happened is we had the biggest boom we'd ever have in history. Housing prices in real terms doubled between 1992 and 2008 when the crisis hit.
And I think you've pointed out construction costs didn't increase that much, so this was all driven by the availability of cheap money to buy these places.
And low underwriting standards.
Yeah.
And so when it all fell apart, then what did the government do? Instead of saying, gee, we made a mistake on our policies, they just pointed at Wall Street and they said, well, you guys did it. And the media, of course, picked that up immediately, and they pursued that idea. And so most people in the United States believe that that's what happened. But in fact, it was caused by government housing policies.
And it's hard for Wall Street to push back because they're regulated by the same people that were pushing the policies.
Exactly. So true. So that's
that's why we're skeptical about the regulators' omnipotent view of how things ought to be.
Right. I'm skeptical about regulation in general. I think it makes things much worse.
Yeah.
But I can point to, and did in the book, exactly how government regulation of the housing finance business created the financial crisis in 2008. Let me just add one datum for your listeners, your viewers, and that is that in 2008, just before the crisis, more than half of all mortgages in the United States were subprime or otherwise risky mortgages, and 76% of those were on the books of government agencies. And what does that say? It says that it was the government that created the demand for those mortgages, not Wall Street.
Wall Street won't create a product that they can't sell.
Right.
And if
That's
you give
true.
me a guarantee that says, I can sell it to you,
And
we
if
got
the
a deal.
government wants it,
Yeah.
they'll get it, and they wanted it.
So let's come back to your story. Let's pick up where we are now with the Treasury under Trump and what has and hasn't happened.
Yes.
We had some things happening with Lou. He's gone. We have a new Treasury Secretary.
Secretary Mnuchin.
A lot of
that's
high
right.
hopes to deregulation. We're seeing a lot of that in labor and other places, but not at Treasury.
Trump did the right thing. He sent a memo to the Treasury Department and said, I'd like your recommendations for what we do about the financial system, what kind of regulation we should have. And what he got back from the Treasury Department was pablum and tweaks, no major steps. Whereas in every other area where President Trump has appointed the senior person, like a cabinet secretary or the head of the EPA,
EPA
he's gotten
good example.
He's gotten very good disruptive, deregulatory policies that have been responsible for the tremendous growth in our economy since Trump came into office. Yeah. The Treasury is an outlier here. They have done nothing significant. And the article in the Wall Street Journal that you talked about is very worrisome, because what it does is it gives the FSOC that I mentioned before much more power. The power, in fact, to close down whole industries if they don't like the kinds of activities that the industries are engaged in.
So this would go from insurance companies to broker-dealers, finance companies,
Anything.
Everybody.
Right.
The whole fintech industry. And
Fintech would be a great example. If the bank regulators on FSOC said to the Secretary of the Treasury, you know, these fintech people are taking very risky steps here. Even though they're risking their own money, they are doing some things that we think might cause trouble in the future. They could say to fintech, that kind of activity can't continue in the future.
Well, we're going to talk about this in a minute, about an upcoming book you have on the administrative state. But it's clear, though, that if FSOC decides something, there is no court of appeal. That's it.
That's right.
So there's no judge, there's no jury. I mean, they've decided that this is it, and that's
Yes.
So where are
There will be
the voters in
There
this?
is a right to the courts.
Okay.
But it's very difficult for a litigant to beat the government on something that the government says is necessary if the government has actually been given the power to make that determination. And that's where a lot of the questions come in. But in the case of FSOC, MetLife did take them to court after MetLife was designated. And they won. They won at the district court level.
Oh, good.
It's on appeal.
Yes.
But they won.
Yeah.
So it is possible to take them to court, but it's not clear whether you'd actually win in those cases. You don't want it to happen, because anytime the government does something like this, it chills everyone else. And that's more dangerous than anything. That's why we didn't have any growth under Obama, because the business community was chilled by fear of new regulations. And when Trump came into office saying, I'm going to cut all these regulations, we're going to deregulate, suddenly people said, hey, maybe we can try this idea that we've been thinking about for a while.
Well, I don't think it's commonly understood that business people respond to views about what the future is likely to be. And it's not so much regulation per se, it's the change in regulations that really affects your ability to, or willingness to invest.
That's right.
So if you say to me, this is the environment, these are all the regulations, you'll say, okay, I'll work with this. But what you can't work with is somebody arbitrarily deciding 6 months from now that, no, wait, you've got to do it differently because we've changed our mind.
That's right. You need my approval.
Yeah.
Well, it didn't say I needed your approval, but
now you do.
You do.
Yeah, so that's changed.
Yes, that is changed. And as soon
But
as
not
that
at Treasury.
became clear, not a Treasury. And that's what worries me so much about this, because Treasury is so important in terms of what kinds of regulations the financial system develops.
So do we have any line of action here? I mean, is this something that we...
The action...
Talk about different people at Treasury.
The action was the election of Trump
Okay.
Who wanted to deregulate. Now, he has then appointed people at the Treasury Department, I'm afraid. Not as many as he needs to, but the people he has appointed, I'm afraid, are not deregulators. They are regulators. And that worries me quite a lot.
Well, we don't have a deputy secretary at Treasury. No one's
Right.
been nominated. We don't have a chief financial officer. We don't have an undersecretary for domestic finance. We don't have anybody, assistant secretary for economic policy, financial markets, or financial stability. These are all the areas that you're talking about
Sure.
that FSOC includes. So we've got nobody that Trump has appointed to come in there to enact his agenda.
That's right.
Not
And
enough people. We got David Malpass, who's
Yes,
a star.
that's one, and Adam Larrick
Yeah, Adam as
is
well.
good, but he's international also. What we need are people in the domestic area who are really serious about free markets, and we don't have that.
Coming back to where we started with the FSOC and then the Financial Stability Board, is that where are things with the Financial Stability Board under Trump? Or with Trump in office?
The Financial Stability Board is still in operation. Actually, when Trump was elected, maybe a week after he was elected, I wrote an op-ed that said, "Hooray, the Financial Stability Board is going to be out of business because without the FSOC, they can't do anything." Turned out to be wrong.
Now they've got an
frequently
enabler.
So unfortunately, the Financial Stability Board is still in operation and still has some hope that they can bring the U.S. FSOC in to work with them and develop this regulatory structure for developed nations. And I don't see at the moment any way to stop that unless Trump, when he goes to Davos, makes a speech that says, we have our own laws, and we are not going to be adopting any program for regulation that covers us as well as other countries. We are satisfied with what we are doing. We'd like to deregulate in our country, but don't try to develop any new regulations that will cover us.
Well, knowing Trump, it sounds like that's a speech he would like to make.
You'd think so.
He just needs somebody at Treasury to write the speech.
Or smuggle it to him.
All right, I'm gonna. Well, I worked in the Treasury in transition. Maybe we'll work on something and get it over there.
Someone has to do it. If you couldn't do it, it's going to be tough.
Well, I want to switch gears to an upcoming book that you have about what people call the administrative state.
Yes.
And tell me about what the administrative state is and why that's a problem.
The administrative state is made up of all the regulatory agencies of the federal government. And they have an extraordinary amount of power. In the Obama administration, for example, there were more than 3,000 regulations, new regulations, issued each year for the 8 years of the Obama administration. Now, when you think about trying to do business in an environment like that, we were just essentially talking about that, becomes extremely difficult to do business. And if you're just an ordinary person, and we're not talking about being in business, but simply abiding by the laws, you don't know what the laws are if 3,000 regulations are coming out of the federal agencies
Right.
every year. That's the administrative state. And what I worry about, and what my book is about, is how to rein in the administrative state. My view is that, and what the book expresses, is that the failure to rein in all of these agencies, and there are thousands of them, and they issue thousands of regulations, is the courts, the failure of the courts in the United States. And they have not done what the framers of our Constitution expected them to do. They were supposed to, under the separation of powers that is embodied in our Constitution, they were supposed to make sure that the executive, which is the president, and the Congress stayed within their channels, within the areas that they were supposed to cover. Congress was supposed to make legislation, the presidency was supposed to enforce the regulation, and the judiciary, under the framers' idea, was to make sure that the two of them didn't get together. And that has not happened.
Well, wasn't the first Chief Justice Marshall pretty strong about the idea that it's our job to tell you what the law is and isn't?
You are exactly right. That's a very famous, from an 1803 case. He said, it is emphatically the business of the courts to say what the law is. And since the New Deal in 1937, that has not been the position of the courts, and it's gotten worse over time. At one point, in 1984, in a case called Chevron, I won't go into the details of the case, but what they essentially said is the courts should really stay out of interpreting these laws that regulatory agencies are using. They're better at interpreting these laws than the courts are. So we're going to allow the regulatory or administrative agencies to interpret the scope of the power that they've been given by Congress. And this has caused enormous amount of new regulation that the American people must begin to feel they don't have much opportunity to control. I'll give you one example. Title IX of the Education Amendments of 1972 said, these aren't the exact words, but they said, no one shall be deprived of educational resources on account of sex. What they meant was that women should be able to participate in sports at the schools in which they were being educated, assuming that schools were getting federal money. That's what the idea was. We're going to be gender blind in educational institutions that are financed by the government, and most colleges and universities do receive that.
Yeah.
Okay. Over time, gradually, the education department has taken that language and turned it into something that says, if a man says something to a woman on campus and she thinks it is sexual harassment, he can be charged with a violation of the rules of the school, and he could be expelled. Now, that has nothing to do with what Congress originally legislated.
Boy, talk about a slope that's slippery.
Sure. And that's only one example. All this stuff about who can use what bathroom, which many people who are religious are quite concerned about, and many parents are concerned about this. This is all coming out of that one line. That is, if you are financed by the government, if you get any government federal money, you cannot discriminate on the basis of sex. So how it gets to who can use what bathroom or who can say what to a fellow student is remarkable to me, but that's an example of how the administrative state has been able to grow beyond what Congress actually wanted it to do.
Well, the three branches, president or the administrative, the legislative, and the judicial, I think the framers had in mind that they would all judiciously or not very carefully protect their turf.
Right.
And that Congress wouldn't want to have things taken from it that it was within its power to do. But instead what's happened is that Congress has moved into a world where they'll pass a law, and the law will be, I think as you put it, a goal. Like we'd like to have clean air. We'd all like to have clean air. And then they punt it over to the EPA, and the EPA administrators decide, okay, well, this is what we want to do. Congress really doesn't have anything to say in it, and by proxy, neither do voters.
Right.
And so a lot of things which would be popular for the constituents of people in favor of EPA might be very unpopular for the vast majority of Americans.
That's exactly right. And what's more, it's not permitted, it should not be permitted by the Constitution. The reason we have a legislature is to balance all of the interests in a society. And our Congress does that. It's not neat, but they do, when they legislate, they try to do that. And they can be as discriminatory as they want. They can be as biased as they want. They don't have to make everyone happy. That's what a legislature is for. As long as it stays within the Constitution, it can do those things. But what, as you suggest, Congress has been doing is setting goals. Then they pass to the agency the important questions of who pays, who is hurt, who suffers as a result, or who is benefited as a result of these regulations. That's not something for an unelected group, a bureaucracy like the EPA or any other government agency, to be able to do. That's a role for Congress. And what I'm afraid of, and what my book is about, is that gradually these administrative agencies are taking over the role of Congress.
Well, the administrative agencies pretty much wrote most of what Dodd-Frank is about. That was all kicked to Treasury.
Exactly.
We just talked about FSOC. Same thing's true with healthcare. I mean, healthcare, what was largely unthought through, and they kicked it over to all the various agencies to implement or to create and implement the rules.
Yeah, that's right. I mean, we have to. The thing that really worries me and should worry all Americans is maybe it's okay in the country today. Maybe all these regulations are not bothering me. Maybe they're just bothering business people, and so maybe I don't have to worry too much about it. But as we go along, and more of these regulations come out, and more of our lives are governed by these regulations, rather than what Congress has done, people begin to lose confidence in the government as a whole. It's a question of legitimacy, and it's very much like what happened in England with Brexit, because the British people said, and I quote some of the stuff in the book, we don't control what goes on in our country anymore. That's mostly done by all these people in Brussels we don't even know.
Yeah.
They are setting the rules that we have to obey here in England. So they voted to withdraw from the EU. Now, just imagine what will happen in the United States if the same attitude develops here. And many people say that Trump is the election of Donald Trump is the first step toward that. And even the media recognizes that he was elected in part because people were pretty disgusted with what they saw happening in their government. Now, it wasn't as specific as regulatory agencies, but that was part of the whole problem that people were perceiving. So we're moving in that direction. And unless we control the agencies, we are going to have a legitimacy problem, just like the British did.
And the agencies are part of the elites.
Yes, that's right.
And that was what Trump was about. It was the elites versus the rest of America. And
exactly.
They said, that's enough. We're going to try something different.
Right.
The solution, though, you've talked about, though, is for the judicial branch to sort of take back its mojo and get serious about saying this is the law, this isn't a law. Can that happen? I mean, is there
yes.
Who and what drives that? Is that going to be
it's
something?
The Supreme Court. Supreme Court ultimately makes those decisions.
So the Trump decisions about who gets to the court matter a lot in terms of fixing the problem of the administrative state.
That's right. In fact, that is the key. And I believe that it's not certain, but I believe that there is a majority on the court now to take back much of the power that they gave to administrative agencies. I think we have 5 with Neil Gorsuch on the court. I think we have 5 out of the 9 who want to take this power back. And that would be revolutionary in my mind and would be a great thing if it happens.
I can't wait. When is this book going to be published?
The publisher says fall of this year.
It's called, your working title is Judicial Fortitude, the Last Chance to Reign in the Administrative State.
Yes. Well, the judicial fortitude language sounds a little stuffy, but it's based on a statement
You could use Mojo.
Mojo. That's right, actually. But Alexander Hamilton didn't use the term mojo.
No, he was not familiar with it.
At least I've read a lot of Hamilton, and he hasn't. But that idea of judicial fortitude is actually a quote from an Alexander Hamilton statement that said, judicial fortitude is necessary to control the elected branches.
I think he uses the word you write in here, the bulwark. We
Yes.
can talk about the bulwarks of that. Well, Peter, that we could go on. Our time is drawing to a close. Let's plan to get back together to talk some more about this, because
Good.
I think we've really just sort of touched the surface of these issues. And thanks for helping to explain what's at stake.
Thanks so much, Bill. It's great to be
Thanks,
with you.
Peter. Great.
Thanks for listening. Want more? Be sure to subscribe to Common Ground with Bill Walton on iTunes.